Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Jacki Johnson, the CEO of Insurance Australia Group's New Zealand operations. Welcome in, Jacki. Thanks for coming in to talk to us so close to Christmas. Look, big news from you guys this week. The proposed acquisition of the Wesfarmers insurance business, Lumley, here in New Zealand. Yes. Let's just start by asking you, what makes the Wesfarmers business attractive to IAG in New Zealand?
I think right across the group it's a complementary business. So where Lumley's strengths have been is in the commercial and intermediated market, and particularly in commercial motor. And when we look at the two businesses coming together, it really does consolidate a position that can provide certainty to businesses in New Zealand by bringing in the best of both.
And you're already the biggest player in New Zealand. Obviously, you've got the state, the NZI businesses, AMI as of a year or so ago, as well. So with the addition of Lumley, it really gives you a dominant position in the market here. I think the various figures I've seen, I think from your company itself has said 40% of the intermediated market, it's 45 to 50% of the total market, and then I think 66% of home and contents and vehicle market. So I guess at those levels, will the Commerce Commission be interested? And why should IAG be allowed to, I guess, have market shares that are that big?
Yeah, so if maybe we step through each of those pieces, we will have 45% of the market. It's interesting to look at how insurance is structured, and it really is a global product when you think about it. Relies on capital that's reinsurance capital and shareholder capital, and it works on diversification. New Zealand is the third highest risky country in natural perils in the world, and that's through a study that was done late last year through Lloyd's. And yet we're number one in terms of market penetration and to protect GDP of this country in terms of property insurance in particular. So we really see that to keep a very stable and secure market is really important here. For us, 45%, that's total across all classes of business. This particular merger doesn't give us very much home owners or car insurance at all. It actually gives us much more commercial product, and we don't like to use the word dominant. We really think we lead, and this will give us a leadership position across those classes where we weren't the leader under NZI in those classes, and that's what we'd like to be able to secure. In terms of competition, that's the job for the Commerce Commission, and we've started engaging this week with the Commerce Commission, and really we want to be responsible in the market, but we feel we've got a lot to offer the New Zealand market, as has been demonstrated in the last 12 years. And our commitment to Christchurch, things like not only the claims that have been complex to say the least, but also the underwriting. When others were pulling out, we made sure we kept capacity down in Christchurch to secure that community, to keep buildings being built, if you like, through contract works. And yes, there was a lot of difficult issues that we secured capacity through our reinsurers to allow that to happen. So we see it's about leadership, and our commitment to the market is very strong, and we want to stay that way and lead across all the different product lines, and we weren't the leader in each of those product lines.
What's the initial response from the Commerce Commission been like, and how long do you think it'll be before they give you a decision?
So it's probably a little early to tell. We had a very constructive engagement this week where it's really about putting all the facts on the table, and the facts are the facts in terms of there's a lot of documentation about what the market shares are of different classes and how the market works, and how reinsurance capacity, and if you think about intermediated markets, who actually sells your product and who can actually move the customers and compete with you. And remember, the competitors in this market for commercial products aren't just local players that are licensed through the Reserve Bank. There's actually capital that comes into the market in the form of Lloyd's, for example, for specialised risks. So it's a very, very complex type of market structure that the Commerce Commission will have to really spend some time thinking through in terms of the distribution as well as the underwriting and what that means for New Zealand.
Now, I had a look at some analyst reports yesterday on the deal, and I think it was some analysts from Deutsche Bank in Sydney were pointing out that the deal would give you 66% of the home and contents and vehicle insurance market. They talked about some other issues in Australia, but we'll leave them aside and focus on New Zealand.
Yeah.
And they suggested that it was possible that IAG might have to I guess, sell some assets, make some divestments to get competition approval. Do you think you will? And if you did, would you still be prepared to go ahead with the deal?
Yeah, so, we're prepared for that if that has to happen. I mean, we think we are the natural owner of these assets to be able to give certainty to New Zealanders. But if the Commerce Commission end up with a different view, we are prepared to divest some of that. Obviously, for us, we've worked out the metrics of the deal, and for us, we want to get full clearance because we know, the whole dynamic of keeping insurance accessible and affordable is important for us. And so we know what that metrics look like in terms of the play, but, we'd be prepared to divest if there was a view.
Can you tell us what you'd be prepared to divest if you had
Probably
to?
Not at this stage, it's probably too early, but it's something that we will be looking at. And obviously, we've spent 4 weeks in due diligence and we've only announced the deal this week, so we're still in that process of engagement.
You talk about keeping insurance affordable. So I guess what can you say to customers and potential customers you'll get through the Wesfarmers deal about what this deal will mean for their insurance premiums over the sort of medium to long term?
Look, this deal probably doesn't impact. The reality is when you look at pricing for insurance in a very simple manner, and if you think about you price for the risk of the asset itself, so if you own a particular car, we've got a research lab that knows, and this is held centrally in Australia, where if we pull apart that car, we know what the car parts are worth, labour time, and what it takes for different models of cars. The same with, we know a lot about roof tiles and building materials, and so what's the risk of that asset, and then there's where is it located. So obviously if you're in Wellington or Christchurch, you then have a price for earthquake that you might not have, say, we probably shouldn't say anywhere in New Zealand, I might bring fate against ourselves, but you would be pricing for whatever that natural peril is, or flood zones or storms or volcanic risks. So it's about the geography, theft, for example, and we work on the geocoding of individual locations. And then there's what we'd call the moral risk of about what's the person's behaviour. So how do you drive, or how do you run your business? And all those things come together, and as an input cost, we've got the reinsurance cost and then distribution cost. And if you're going through an intermediary, you're already paying a commission to whoever's distributing your product. So all those things actually come together to form the price. A lot of those things don't change through the deal. And so we will still be a very disciplined insurer in terms of making sure priced correctly. Of course, the one thing the Reserve Bank wants to make sure is all the players in the market behave in a way that they can be here for the long term, because you really need to deliver on the promise when the worst happens.
I guess another aspect of being such a big player in the market is that should another, hopefully it won't happen, but another sort of Christchurch type scenario, if that happened, obviously a lot of the insurance would fall on one company. Is that a bigger risk for New Zealand and for IAG?
It's no bigger risk. It's the reinsurance panels. If you think about what we do, we all make a decision, and this is part of our licence conditions, of course. The Reserve Bank look at that as part of the regulatory framework, how much reinsurance you need to buy. They audit for that, and so does APRA as the regulator of whatever where you're listed. And so we're a listed insurer in Australia. So we have APRA and Reserve Bank having certain criteria of how much reinsurance, and you never place your reinsurance with one company. It's spread across a panel. So for us, what we'd have is a bit like excess on a home or a business. You have a deductible in terms of your own reinsurance. So that doesn't change. You're still exposed to that first loss. And remember, we talk about the big events of things like Christchurch, or when the shake was happening on the Seddon fault that impacted on Wellington. Really, if you think about the storms that hit in September across the whole of the insurance industry for New Zealand, it's something like $80 million was spent paying claims in that period for September. So that already went across the industry. And so it's any of those sort of events, you've already made a decision how you're managing your reinsurance, and that doesn't change with this deal.
And have you talked to your reinsurers about this deal, and what does it mean for them?
Yeah, so for us, we'd be a bit foolish to enter this sort of deal without making sure your reinsurers are going to back you on it. We've got very good engagement with our reinsurers, and we're in the process of just finalising our program now, and it's our normal timing to finalise programs across the group. For them, they're already exposed to this market, and they already had good relationships with Lumley, and so we've had indications that there's no problem with them continuing to give the support.
And will it reduce your reinsurance costs at all, this deal?
We think it will, because it will go to the play of scale, and what I explained earlier on, this is a global market in terms of insurance, and particularly when you're looking at commercial insurance, it certainly is a global market when you're looking at the likes of Lloyd's giving direct capacity into this market. So for us, we actually see that they'll stay committed to this market. The reinsurers have been very, very good in this market, in my view, when I think of in other big events I've seen in my career where they might be a little bit more nervous to give capacity. They've supported Christchurch all the way through, and of course it's their money that's contributing to a lot of the rebuild, either through the EQC or through the private insurers.
Now, we've also got an election coming up next year, and we had the Labour Party at their conference, which was in Christchurch this year, talk about how they would like to introduce a government-owned insurer to the market. I'd be interested in your view on that and whether that's needed, but also, do you have any concerns that your deal, Lumley deal, could, I guess, embolden Labour in doing that, if they win the election?
I mean, let's remember too that government already have two key insurers. One is ACC, and the EQC is a first loss insurer for property damage. So the reality is that there's half of the insurance market here is already in government hands. We're really only half a market here in New Zealand. We don't have long tail classes predominantly available to the private sector. So the long tail classes like bodily injury are already provided by government, as is first loss property damage for home insurance. So that's an important fact that people need to understand, that the government is already exposed to that point of being an insurer for those products. In terms of, competition is good, so another entrant, we see entrants coming and going all the time. It is a little odd for them to announce that when state insurance was sold to Norwich, remember, by a Labour Party. So, I wasn't in the market at that time, but, it's a policy decision, I think, that needs to be made at a government level. I probably wouldn't have a view. I don't think, some of the numbers that came out about $80 million being there, insurance is a heavily capitalised business, and the Reserve Bank has certain requirements in terms of your capital to make sure you've got adequate solvency to be there for the customer when the worst happens. So a lot of things, and I think David Parker's come out and said, it will be open to business case. So I think we'll all have to wait and see how that business case come out and whether they'd have the appetite to then have an insurer, or more of an insurer than they've already got.
Now, obviously Christchurch has been the big story in New Zealand insurance for the past 3 or 4 years now.
Yeah.
We see a lot of stories coming out of Christchurch, obviously. Some are pretty sad ones.
Yeah.
Where are you at in terms of, I guess, settling all your claims in Christchurch, and can you give an estimate of when you think it'll all be wrapped up?
Yeah, so I'm down in Christchurch every 2 weeks, and I chair a meeting across all CEOs of all entities that are party to the rebuild, and we've been working through for 3 years some very difficult issues. Remember, the ground didn't really stop shaking in terms of big shakes for the first 2 years, and it is very sad, you're right. There are some awful stories about what the earthquake has meant for some people, and we're working very hard to make sure under a lot of our policies, all of the industry, we could have settled claims and just got out of there. But one of the things that we've worked very hard with our reinsurers and with communities is we want to be part of the rebuild, because if we're part of the rebuild, we can help people rebuild to a standard that's required, but also we can continue to insure properties because we know they're of a good standard and they'll be insurable. So we're trying to do things the right way, get certainty about the land, make sure people aren't put into a worse position than they might have been otherwise. And that's taken a lot of partnership between the EQC science teams of making sure land is understood. And for us, we've settled a very large part of the commercial claims, and we're nearly halfway with all our residential claims. And remember, we can't manage claims until the EQC have finished their piece, because they're touching all the residential claims. So we have now and we announced this late last year, December 2015 is when we see all our claims will be finalised. And I said I'd prefer finalised rather than settled, because settled does implicate sort of your cashing and running. And so I check that with my executive in charge of Christchurch, who lives in Christchurch, and we're well on track to meet those timeframes.
Well, thanks a lot for that, Jacki. That's Jacki Johnson, who's the CEO of IAG New Zealand, and I'm Gareth Vaughan at interest.co.nz.